Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May the 13th. Wanted to talk about what we saw in markets last week and then briefly touch on what we've seen so far this week and the volatility that has crept into the marketplace, and talk a little bit about the volatility that's happening, how it's impacting your portfolio, and where we see markets moving from here. So last week was a good strong week for the markets, with the S&P 500 finishing the week up 1.4% after the week previous being flat. So a nice strong week in the S&P 500, bouncing back, and the small and mid caps actually outperformed the large caps last week, with them being up a little bit over, one at 2% and one over a little bit over 2%. So nice strong bounce back. But however, this week we've seen a lot of increased volatility and heavy selling pressure, especially in the NASDAQ. We've seen the NASDAQ get hit pretty hard on Monday, and again yesterday on Wednesday, from heavy selling pressure in the NASDAQ, as well as we saw it across the board yesterday. And the reason for the heavy selling yesterday and into this week is we knew coming into this week that we were going to get CPI, or Consumer Price Index, numbers, and what that is telling us is the cost of goods, and is inflation here or is it not? So the expectation was for inflation in the CPI index to be up 3.6% year over year, or month over month. However, it was up 4.2%, causing a bunch of fears in the marketplace that inflation is here. It's hotter than expected, meaning it's greater than it was economists are expected, and the fears then are that's going to force the Fed to move their hand earlier or sooner rather than later, that they're going to raise interest rates and maybe slow down some of the economic growth and the economic recovery. And so you saw yesterday, you saw just selling across the board, a good 2% down day in all major averages. And what we've seen today on Thursday is a nice bounce back recovery from the deep heavy selling that we saw yesterday. Now, a couple of things to talk about when it comes to inflation and how it's going to impact you in your portfolio. Just understand too, we are going to have inflation, and we talked about last week that it's here. The proof is now in the pudding. We got the numbers from the CPI index this week indicating that inflation, in fact, is here. But remember, we're also running off of comps from last year that were negative numbers as we were entering in the pandemic. So where your CPI numbers were actually negative. So we're running with these comps year over year that's going to show higher inflation. Well, of course it is, because we had negative numbers to start with. The other thing to always take into consideration too is, as long as the economy continues to grow and is doing well, economies that are doing well and thriving can stomach and can tolerate a little bit of inflation. If anything, it's actually a healthy thing, and that's showing that your economy is growing, costs of goods are increasing, and demand is there, people have money to spend and are spending it. And that moves markets and economies forward. So again, it's just a short-term blip. The question that is going to be on everyone's mind is this inflation, is it transitory or is it long-term? And by transitory, that means short-term or short-lived. Is it going to be 3-4 years, or is it just going to be this year that we see the inflation really tick up this year and then flatten out for 2022? So again, if you have questions about how this impacts your portfolio or ways in which to invest moving forward, give us a call. Let us know. We're easy to talk to, because the inflation numbers do have impacts on stocks and which sectors of stocks and which stocks you want to be invested in. So please feel free to give us a call at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your day. Thank you.